Hello money magnets and master traders, it's your Uncle Charters. We had an amazing week of trading last week with lots of volatilities. We had some moves to the upside, but mostly we had moves to the downside, and it was incredible, truly a blessing. And with the VIX above 20, it's above 22 actually, I say we're gonna have a lot more awesome trading opportunities this week. So let's prepare. Now usually in the beginning of my video, I talk to you guys about how I traded for the day, how we use the levels and setups, but since it's a weekend video, it's a Sunday, I'm just gonna get straight to the point and get straight to the daily chart. And I have to say, it looked like a double bottom so far. And when I see a double bottom, some people think bearish, some people think bullish, but for me, I think it looks like a cup. And when I see a cup, my next question is, will there be a handle? It's not always the case, but cup and handle is one of the most famous patterns that traders love to use. And this one is looking like an inverted cup and handle, a potential cup and handle. And if it's an inverted cup and handle, that's usually a bearish pattern to play. Now, the rules of a cup and handle pattern is that the retracement, whether it's a bullish one or a bearish one, the retracement does not exceed more than 50% of the cup. In this context, it is potentially a bearish one, and the 50% retracement is all the way up around the 671 level. So that tells us that as long as below 671, the bears have a chance for more downside eventually. Eventually is the key word here. And above 671, that tells us that the inverted cup and handle pattern is invalidated. So that means above 671, I would feel a lot more comfortable calling a bottom or switching back to bullish. Why? Because the bearish pattern has been invalidated. But as you guys can see, that SPY closed around a 659 level. So it's pretty far away from the 671 level. And I can't really say to you guys with confidence if SPY is bullish or bearish in the medium term, okay? Because in the long term, it's bullish. Medium term, it's looking bearish right now. Why? Because it's below 671. Will we get more context to give us more answers this week? I reckon we will. But as long as below 671, it's bearish, and above 671, it's bullish. So I can't say we're bullish just yet until we're back above that level. But what I do want to talk to you guys about is the short-term price action, because Uncle is a day trader. I'm also a short-term swing trader. I'd rather make my money ASAP. I want my money now or right away. So that's why I'd like to give you guys levels and setups so that we can trade it unbiasedly, up or down, it doesn't matter. Trade it unbiased in real time. And Uncle's strategy is very simple. We know the levels, we know the setups, and we just trade it. No bias, no crystal balls, no ego. We don't try to control the price action, we just follow it. And one thing that tells me whether I should be bullish or bearish or not in the short term is I use the 5 daily moving average, because we can see that SPY is below the 50 and the 20 daily moving average. So medium term, we are bearish. But what about the short term? Well, we're below the 5 daily moving average as well. So in the short term, we are also bearish until that moving average can get recaptured. My question for tomorrow is, will we get a bigger bounce? Because we did have a bounce on Friday. Will we get a bigger bounce? Or if that bounce on Friday is just a dead cat bounce or some type of relief bounce? Only the price action can truly give us the answer. I have a fib level at 660.7. If that level clears tomorrow, that's your answer for the short term, that we are bouncing, that we are bullish for the short term. And above 660.7, I have 665, 667, and the 671 level as targets. If those levels go hit, that's a nice relief bounce. But like I said earlier in the video, above 671, the inverted or inverse cup and handle pattern gets invalidated. The bearish pattern gets invalidated, I'd feel a lot more comfortable switching back to bullish. So I'm not bullish until 671 can recapture. If 660.7, 665, or 670, 667 clears as resistant, I have no problem going long. But I have to understand that the context is still overall bearish, so I'm going to play it level to level with runners. So if 660.7 clears, I'll probably take most profit around 662 or the 663.5 area and just let the runners run. Swing the runners, I'd say. But once again, if 660.7 fails to clear as resistant, we are still overall bearish for the short term. I have 659, 657, 654, 652.8 as support levels. Now the main support levels that bears want to see break down is that 652.8 level. There's a good chance we drop down to the 644 level. Keep in mind, guys, in my Discord, I'm a lot more in-depth with my price action analysis, but I want to give you guys the less complicated version, I shall say. It's not as in-depth, but it's less complicated so you guys can comprehend it and just take it in. And I tell you, to keep it simple, 652.8 fails, that double bottom is canceled, and we are dropping down low down to 640. 644, likely down to 644. Are we on the same page? So 660.7 bounce continues up to 667 and 671, and below 660.7 there is no bounce, and we are dropping down lower. And bearish confirmation would be to take out that 652.8 level once again. Here's QQQ. Now, unlike SPY, QQQ was able to break down its low from October 10th. That was the legendary drop we had from November 20th. But the next day, we recaptured that 589 level. 589 was the October 10th low. So technically, that is a false breakdown setup. The question now is, will there be bullish follow through? And if there is, you guys see how we rejected from the 5 DMA. The 5 DMA is around 595 right now. I need to see that level clear. Then I have 598 and 599.3 would be my targets. And bulls definitely need to recapture that 599.3 level. That's a fib level. If it wants to retest that 50 DMA, that's the level that must clear to get back to 607 plus. I reckon a bottom could be in if we get back above 607, because that would be a recapture of the 5 DMA, which would definitely help the bulls out a lot. But right now in the short term is looking bearish, and as long as below the 595 level, which is the 5 DMA, more downside is possible. And your bearish follow through would be to break back below 589, because even though that is a false breakdown setup, there's no guarantee that that's the bottom. So if we break back below 589, we'll know no bottom is in, and we're likely dropping down lower, down to the 579 and 577.7 level or lower. Here is Tesla looking bearish. Tesla's looking super bearish. Broke down at 399.7 level last Thursday and showed bearish follow through on Friday. If there was more downside, 391 and all the way down to 383.8 must fail. That level held that support. But if it fails, 376.7 and 366.6 or much lower incoming. I would not trust the bounce on Tesla unless it can recapture 399.7, because if it does, 414 and 427 are likely back in play. Now the 20 daily moving average is around 432. If we can recapture that moving average, I'd reckon a bottom is in for Tesla. And here's NVDA, still looking pretty bearish. 178.8 is the equilibrium level. Below it, more downside is possible. Above it, we can get a relief bounce. But if we're talking more than a relief bounce, I need to see 183.4, 185, and 187 recapture. Above 187, I'd favor some type of bottom. Not the bottom, but a bottom is in for NVDA. We can get at least a $15, $20 pop back to the upside. But if we're below 178.8 and more downside is a plan, I need to see 174 fail, and if that level fails, 172, 170.8 or much lower incoming, will likely drop another $10 to $15 to the downside. But 178.8 is your level to watch. Here is Amazon. Amazon went for a bounce. Now we have to look at the context. What was the last fib level that failed? That's around 222.7. That's a fib level. We broke it down and nearly back tested it as resistance. So for me to trust the bounce, 222.7 is a level that must recapture, and we can likely pop up back to the upside. 227.4, 229, and 230.4 are my targets to the upside. Bottom possibly in above 230.4. But as long as we're below 222.7, the bounce that we had from Friday, that's all we're getting. And we're likely dropping back to the downside, down to 216, 214, or much lower in play. 209 is definitely a target of mine for Amazon. Here is Meta. It went for a bounce, but as you guys can see, that green line, that's the 5 DMA. It did not recapture it. 5 DMA is around 594.6s. We can round it up to 595. That's actually one of my levels. So we can clear 595. We can pop up to 600 and 601.2. And above 601.2, I'd be a little bit more bullish in favor of a bigger bounce. But if we cannot clear 595, I recommend staying bearish and back down to the 580 to 585 zone would stay in play. Tough buy zone down there, but it would stay in play for another test if we fail to recapture 595. Here is Microsoft. If there was ever a time for bulls to step up, this is it. Because Microsoft came just a few dollars shy of my 200 daily moving average. That would be a good buying opportunity if it can hold and bounce. So for me to trust the bounce from here, I need to see 475 and 476.5 recapture. If those levels recapture, I would go long, and I'd favor a $10, $15 pop back to the upside. Above 487.7, maybe some type of bottom can be in. Now, if they cannot clear 475 and the 476.5 fib level, then of course more downside is possible. 470, 468.5, and my 200 daily moving average is around 466.5. Those levels fail, moving average or not, more downside incoming. coming. Moving on to Apple, it went for a bounce. It recaptured the fib level. It also recaptured the 20 daily moving average. 270 is the level to watch. Now the false breakdown is a bullish setup. So if we are above 270 come tomorrow, the bullish setup stays intact. And if the bullish setup stays intact, we can expect more upside. 274, 276, and 277.3 would be my targets. But if we drop back below 270, that is your trigger to enter puts and bet back to the downside. 268, 266, 264.5 would be my targets. And below 264.5, I would be bear bias once again on Apple. Here's IWM with an inside candle setup. It went for a bounce, but it ended with an inside candle setup, which is choppy price action. It's overall bearish below 237.5. So to invalidate that, 237.5 and the 239 level must clear. If that happens, I would go long and I will switch back to bullish confidently on IWM. But if this is not bullish and we're dropping back to the downside, the trigger for a bounce or drop back to the downside will be the loss of 234. If that happens, we'll likely go and retest 228, and below 228, Uncle Charters would be bear bias. That's the breakdown of the chop range, the bottom of the chop range. And here is the VIX. This is what I'm thinking. This is why I'm thinking that we're going to get more awesome trading opportunities, because the VIX is up, and if the VIX is up, that means volatility, and this volatility is going to be great for day trading. Great. But if the VIX drops lower, that's a sign that volatility is dropping. It's also a sign that SPY is popping, because it's usually inverse each other. So we'll know the VIX is dropping if support levels fail, 22.3 and 20.7. Those levels fail, bearish price action behavior. But we want to see the VIX pop back up. It's not that I want to see SPY drop. I just want to see volatility stay alive. And if it's going to pop back to the upside, 23.8 and 26.13, we'll round it to 0.2, 26.2 must clear to put 29 or higher in play. I would love to see the VIX back into the 30s. That would be great. Here is, last but not least, here is Palantir PLTR. This is a viewer's request. And the level that I'm watching for PLTR is 154.87. That is the equilibrium level. If above it and 156 and 158 clears, that's your sign to go long. 160.5, 168, 169.5 would be my targets. But if we're below 154.8 and we start dropping down support levels 153 and 150.3, that's your sign that we're going to drop down lower. 147.5, 145.8, 144 or lower would be my targets. Okay, so before I let you go, here is the DarkPool levels. This is where big money's getting busy. To be honest, we didn't really get anything over $1 billion in premium. The biggest premium we got was at 652.45 for only 739.5 million. Maybe tomorrow we'll get some bigger premiums, but right now that's all Uncle could give you, because that's what Cheddar Flow has shown me, 652.45. And as usual, if we're above it, maybe we can get a bounce, but if we're below it, the sell-off continues. Hope you found value in Uncle's video. If you want more content from me, join the family, join Uncle's extended family in the Discord. We're going to kick these market makers ass together. We'll make hundreds of thousands of dollars together, and there's not a darn thing the market maker's going to do. You know why? Because we, me and you, are money magnets. Peace.